Hello there. We're trying a new format for our results this year. I'd like to welcome you all to this short video summarising Centrica's progress in the first half. In a moment, Russell O'Brien, our Group CFO, will take you through the first half financial performance, but before that I'm just going to touch briefly on what we've been doing. 3 years ago we said we wanted to simplify and de-risk our portfolio and strengthen the balance sheet. Now I think you'll agree we've done exactly what we said we would do. And we've also been very focused on improving operational performance. And the hard work that we've put in to strengthen the core of Centrica really came through in the performance that we saw across the group in the first half of 2023. In retail, we continue to invest in our operations and in customer service, and we saw the benefit of that in improved performance and customer satisfaction in the first half. We've also been setting up our businesses to capture value from the energy transition, which is a huge opportunity for us. In optimisation, the breadth and the scale of the physical positions and world-class capabilities allowed energy marketing and trading to create value from their own operations, whilst also adding value to other businesses in the group. And in infrastructure, we delivered good volumes with high asset availability in Spirit Energy, in nuclear and in Rough. And importantly, in the past 6 months, we've also been able to extend the lives and therefore the cash flows of all of these assets. This is also critical for UK security of supply. This outstanding operational performance helped underpin a very strong financial result, which Russell will cover shortly. And importantly, we continue to deliver attractive returns for our owners, with a 33% increase today in the dividend and an intention to extend the current share buyback programme to £1 billion. Our operational turnaround is now materially complete. We've got a focused and a complementary portfolio, an incredibly strong financial base, and fantastic operational foundations. And most importantly, our extremely talented colleagues are energised and they're engaged. But we're not complacent. We will never stop driving operational improvements to deliver better service to our customers. But now we're moving on to the next phase. We're investing for longer term value and growth to deliver sustainable profitability. This is a hugely exciting time for Centrica, and there's more detail on our strategy in other presentations and materials available on the website. For now though, let me hand over to Russell, who'll talk you through the first half financials.
Thanks Chris, and hello everyone. As Chris outlined, Centrica's financial performance was strong in the first half of 2023, demonstrating the value of our balanced portfolio and our focus on delivery. Adjusted operating profit was up across the board. This led to adjusted earnings per share of over 25p, more than double that of last year's first half. And our robust earnings also helped drive higher free cash flow in this period. When combined with more than £1 billion of margin cash inflow, which I'll come on to shortly, this resulted in first half net cash of over £3 billion, around £2 billion higher than at the end of 2022. This performance gives us confidence to declare a 33% increase in the interim dividend, in line with our progressive dividend policy, and we've also announced today a £450 million extension to our share buyback programme. Let me take you through our operating profit, which was higher than the first half of last year in each of our pillars. Starting with retail, where encouragingly British Gas Services and Solutions returned to profit. We see positive signs of sustainable recovery driven by our focus on operational improvement. The biggest driver of the half one improvement though was in British Gas Energy. Underlying performance was solid in residential supply, and we saw customer growth in small business. The main driver of this improvement was the dynamics of the default price cap and allowances in the first half of this year to recover costs incurred in prior years. I'll cover this in more detail in a minute. Bord Gáis in Ireland reported a loss in the first half, mainly due to a continued difficult retail market backdrop. In optimisation, energy marketing and trading had another great half on the back of its strong performance in 2022. Delivering value in each of its power and gas, renewable energy and LNG units. We continued to build the business for the future, signing this month a new contract with Delfin to buy 1 million tonnes of LNG every year for 15 years from 2027. In Centrica Business Solutions, energy supply profit was higher. supported by our energy procurement and risk management capabilities and a 10% growth in volumes from medium-sized business customers. Last but not least, infrastructure. The Spirit Energy business delivered a higher profit. Behind this was a 10% reduction in production volumes, reflecting the expected natural decline in the portfolio. But that was more than offset by a higher achieved gas price underpinned by our rateable hedging strategy. We were delighted to bring our Rough field back to storage operations last October. In the first half, we benefited from the hedges we had locked in last year and leveraged our optimization capability for further value. We have recently announced the near doubling of capacity at Rough, with Centrica having sole use of the asset until at least 2030. Nuclear profit was flat to last year. Volumes fell by 22% due to the closure of Hinkley Point B in August last year and a planned statutory refuelling outage at Sizewell B in the first half of this year. We also saw a £180 million impact of the new electricity generator levy, which is accounted for in cost of sales. Volumes were robust across the rest of the fleet and realised prices were higher, again reflecting the benefit of our rateable hedging strategy. Let me now go through the British Gas Energy result in a bit more detail. British Gas Energy made £969 million in the first half, the majority of which is in the residential business. This compares to profits of £98 million in the same period last year. In normal market conditions, we would expect enduring profitability from our residential energy supply business to be in the range of £150 to £250 million. The increase in H1 2023 is mainly due to one-off factors relating to the default price cap, which we would not expect in a normal reporting period. The price cap is designed by the regulator Ofgem to ensure that efficiently incurred costs can be recouped by suppliers. The mechanics are complex and the allowances don't align perfectly to when costs are incurred. This means that Ofgem has to make occasional adjustments after the event, and the impact can be either positive or negative in any financial reporting period. And in H1 2023, all suppliers saw the recovery of previously incurred costs. The two most material items were for the recovery of exceptional commodity costs and adjustments relating to the shape of the commodity curve. Due to market dynamics, the default tariff has remained cheaper than nearly all fixed price tariffs since late 2021. That meant that British Gas and all other suppliers had more customers on the default tariff than planned for. This, coupled with simultaneous rises in commodity prices, resulted in all suppliers having to purchase electricity and gas at prices above the price cap for a proportion of customers across 2021 and 2022. This impacted profits, and from April 22, allowances were introduced by Ofgem into the price cap for recovery of these costs. That continued into H1 2023. In addition, there are now allowances for the shape of the commodity curve. Because the default price cap averages costs over time, the commodity cost element of the cap can be below the actual cost to suppliers of purchasing the energy for their customers when the electricity and gas prices are lower in future periods. There is a mismatch between revenue and cost to supply. This dynamic was particularly pronounced in Q4 last year, and Ofgem introduced allowances for all suppliers to recover these costs into 2023. As always, there were a few other adjustments moving in both directions, but these are the main ones. Overall, in H1 2023, we had £500 million of recovery of costs from multiple prior periods. The first half of 2022 was negatively impacted by unexpectedly higher supply costs of £250 million. Profits were also impacted by a number of other factors. Our customers used less energy and the bad debt charge has increased. We further invested in transforming our customer service and made an additional £50 million voluntary donation to help support customers struggling with their energy bills. These impacts were more than offset by our effective risk management and optimization around weather and commodity prices. Moving now to cash flow. Higher earnings drove higher EBITDA. Tax was also up year on year, although following the disposal of Spirit Energy's Norwegian assets, the impact was less material. Capital expenditure was up to nearly £200 million, including a ramp-up of investment in flexible and renewable power assets consistent with our refreshed strategy. The free cash flow also reflects a working capital outflow. The big moving parts are in British Gas Energy and Energy Marketing and Trading, and I will unpick these for you now. In British Gas Energy, there was a reversal of a large inflow in 2022. This reflected the timing of payments under government support schemes, which were initially paid to us before being quickly passed to our customers. At the end of last year, we held around £600 million, which has now been passed on. More material, though, is the reduction in payables from the end of last year. This is a normal dynamic in our business, with residential commodity costs settled a month in arrears and much lower consumption in the summer months. But the movement this year is particularly pronounced due to the extremely high December 22 commodity costs, which settled in January. The impact of this seasonality and the changing price environment was an outflow of £1 billion. We saw a significant working capital inflow of nearly £800 million in EM&T. In 2022, that business generated significant profit of £1.4 billion, but free cash flow was much lower at around £200 million. Through 2023, we are seeing those high earnings translate into cash flow as derivatives and other positions close. Our business model means working capital will always move around, particularly in volatile commodity price environments. This reinforces the importance of maintaining a strong balance sheet with adequate liquidity and cash flow flexibility at all times. Bridging to our net cash position. This improved due to the strong underlying free cash flow generation of the businesses, and was also boosted by £1.1 billion of margin cash inflow over the past 6 months. This took margin cash balances from £823 million posted by us at the end of last year to almost £300 million held by us at the end of the first half. As we have seen over the past 2 years, margin cash moves can be quite volatile, depending on our positions and the external market environment. We have returned over £500 million to shareholders since the start of the year, with around £400 million of share buybacks and the £113 million payment of our 2022 final dividend in July. Reflecting all of this, we saw a total cash inflow in the first half of around £2 billion, with closing net cash of over £3 billion. Our financial strength is about more than just our net cash position, with pension and decommissioning liabilities also needing to be taken into account. Centrica has significantly de-risked both of these over the past few years, with our balance sheet now far more robust as a result. If you look back, at the end of 2020, we had net debt of £3 billion, a technical pension deficit of £1.9 billion, and pre-tax decommissioning liabilities of £2.4 billion. Now we have £3 billion of net cash, and other liabilities have halved in total, with the roll-forward technical pension deficit now around £800 million and pre-tax decommissioning liabilities of £1.4 billion. This balance sheet strength supports our strong investment-grade credit ratings, important to allow us as a responsible supplier to buy energy for our customers in advance, and for our upstream infrastructure asset hedging activities. It also provides us with the flexibility to balance market, credit, and cash liquidity risk, affording greater opportunities to capture value in optimization, particularly in volatile conditions, as has been recently demonstrated. And finally, as part of our strategy, having the balance sheet strength and flexibility to invest for the future is incredibly important for the group. Before I close, let me cover the outlook for the year. We expect seasonality to drive lower underlying profits in the second half of this year, a normal dynamic in our industry. As usual, uncertainties remain over the balance of the year, including the impacts of weather, commodity prices, the economic and regulatory backdrop, and the competitive environment, amongst other things. This results in a range of possible outcomes for the full year. Overall, this is consistent with what we said in our AGM statement in June, with adjusted EPS and free cash flow expected to be heavily weighted to the first half. I'm very positive about the future and excited to have joined Centrica, and I'm confident that our updated strategy, underpinned by our financial strength, will help us create material shareholder value over the coming years. Thank you.
Thanks, Russell. So we've had a great start to the year. Our balance sheet is incredibly healthy. Indeed, when you adjust for the fact that we hold customer deposits and margin cash, more than a third of our share price is covered by net cash in the balance sheet. And the future is really positive for Centrica. With our balanced portfolio, our leading market positions and our net zero capabilities, leaving us very, very well placed to create more value and deliver more growth. So just like to say thanks very much for listening. I look forward to updating you further on our progress in the future.